market order, which is pretty much instant execution. It's also called instant execution, and that sort of trade is taking a trade at the exact price, right? And then I'll explain pending orders just now. And then we have a stop loss order. So a stop loss order is a function that will basically close a trade for you automatically. So like in the name, stop loss, what you basically do, so when you open your trade, right, you'll put a stop loss there, and basically you'll say like, if my account reaches negative $10, I wanted to close the trades for me. Or if this trade reaches negative $10, I want you to close the trade for me automatically. You don't have to be there in front of your computer, in front of your phone. Your phone can be off, your laptop can be off. It will just automatically hit for you. So if the market moves against you and it goes to your stop loss region, to your negative $10 region, then it will automatically close the trade for you. And then there's also take profit order, where basically you'll be like, okay, once I've made $20 profit and I'm not in front of my computer, I'm not in front of my phone, then the take profit order will automatically close for you. And then we have pending orders, buy stop, sell stop, buy limit, sell limit, which I'm about to draw. All right, so your pending orders. So we have pending orders. First, buy stop. Right? So buy stop is like this. Let's just say, and remember all the examples of USDs are. Let's just say price is trading at 14 Rand 27. But you believe that if it can reach a price of 14.50, this market will continue going up. What will happen is you'll set a pending order here. So you'll say, as soon as market reaches this order, please buy for me. That's a buy stop. When market reaches this place, then markets will automatically buy for you. Right? So a buy stop is when the price is below your projected price, right? And you think that if it can get there, it will hit. So price moves below, goes up, gets to your price, automatically opens the trades for you and moves like that. Same as with a sell stop. Right? So basically, you'll be at a price of, let's say, 14.80, right? And you believe that if price will reach 14.50, again, I'll use that, it will continue going down. So you can be at this price, but you set a pending order that as soon as price moves down and get here, it will automatically open a trade and will go for you. That is what we call a sell stop. And then we have a buy limit. And a sell limit. And they work in the opposite way. So remember, with your stop prices, if you're buying, you are below the price. A buy stop, you're below the price in which you're looking at, and you hope that when it gets there, it's gonna. You hope that when it gets there, market is gonna continue going up. So it starts buying at that point. Sell stop, you above the price that you're looking at, and you believe that when it gets there, it's gonna continue going. But a buy limit and a sell limit works like this. So you'll be at a price above, let's just say, 14.80 again. And you believe that this price of 14.50, right? You believe this price of 14.50 is a floor for the price. So you believe that once price can reach this point, it will go back up. So it will work like that. Price will move down, move down, move down. As soon as your price is there, right, then this will start buying for you in hopes that when you get to that area, the market will find a floor and continue going up. Same thing with the sell stop. You'll be at this price over here of 14.50, right? And you believe that if you can reach a price of 14.80, markets will find that as a ceiling. So markets will go, hit this ceiling of a price, and once it's hit that ceiling, then it will continue going down. So that is a sell limit. So the buy and sell limits, a buy limit, if price is above where you're looking at, right, a buy limit will work in that way. And if price is below the price you're looking at, the sell limit will look that way. So you can see where they differ. This is basically you looking at a counter trend, whilst the limits are basically counter the trend that the market is currently moving at, right? Whilst the stop orders are on a continuation of the trends that you are looking at. And those are the limit orders that we have, and you can use them in very powerful ways, especially if you don't have time to sit in front of your laptop or your phone. And then a bit of terminology, right? When we say we're going long on a trade, it doesn't mean that we are taking a long time on a trade. A long trade means a buy trade, while a short trade, right, means a sell trade. So if we're saying we're going short on Euro USD, it doesn't mean we're going to spend a short time on Euro USD. It means that we are just going to sell Euro USD. And then, there's a bull market and a bear market. A bull market, a bullish market, or bulls are the buyers of the market. So if a market is going up, we say that we have a bullish market. And if a market is going down and the people that sell, we call it a bearish market, right? We call it a bear market, or the people that are sellers, we call the bears. This coming from how these animals attack you. When a bull attacks you, it runs towards you and picks you up. Unlike a bear, when a bear attacks you, it will hit you to the ground. And that concludes our first lesson into introduction of the foreign exchange markets.